Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Gold just hit $4,000 for just one of these, 1 ounce, and silver just hit a 14-year high. And these things are worth a lot more money than they were about 6 months ago. So a lot of people are wondering, is there a near-term top on gold and potentially even silver? And that is exactly what we're going to talk about. So welcome to the Golden Nugget that happens every single Wednesday. I'm Drew Wolfer, a verified pro trader at verifiedinvesting.com, commodities expert, and your golden guide to everything that's happening inside of the metals markets. If you were here last week on the Golden Nugget, you went 5 for 5, yet again, another 100% win rate this week. That's why we have the 89% win rate that we have inside of gold and silver just over the past year. Documented, go check it out, do whatever you want to do. But let's talk about what the Golden Nugget actually is. So we're going to switch up the order of the way that we do things now. And I want to invite people as well, if you have any questions about anything that I'm talking about, right? Feel free to drop them in the comment section below, and next week I will pick out a couple of comments to go ahead and answer live on the Golden Nugget. So drop your questions in there. Let's see if we can get them answered, right? Now, the first thing that we're going to do is we're going to switch up the order a little bit. We are going to do the commodity compass first, which is where we talk about everything that is happening inside of the metals markets and just the broader financial markets, what's going to actually move and drive the markets over the next week, right? Secondarily, we're going to do my favorite segment, which is called the Golden Nugget. And that's where I give out a Golden Nugget on the Golden Nugget Show once a week that comes directly from my Golden Opportunity training that I brought out in conjunction with Verified Investing. And it will teach you a concept that I am talking about inside of that training and kind of give you a little bit of a snippet of what you can expect if you do in fact get into the Golden Opportunity. Then we will do 2 special segments that I can't tell you what they are, but you'll probably be able to guess what they are. And then secondarily, we will gauge gold, which means we are going to do the technical analysis on gold and we will do the technical analysis on silver. And we will probably do silver first. Then the last thing we will do, the economic calendar, and tell you everything that will be moving and driving the markets on a daily basis until you see me next week again on the Golden Nugget, because hopefully you are showing up every single Wednesday, and we appreciate everybody that does show up. So much love to you, and let's get into our very first segment, which is going to be the commodity compass. So what is actually driving gold, silver, just the broader financial markets right now? Because we saw gold hit all-time highs. We saw silver hit 14-year highs, 49 bucks, over $4,000 on gold right now. We're looking at, what's behind this massive surge. So gold actually went to about $4,050 per ounce for the first time ever, okay? This was fueled by investor demand for safe haven assets amid a lot of elevated uncertainty, okay? Your key drivers, you've got expectation of U.S. Interest rate cuts, okay? We just had a cut. They think there's going to be at least 2 more by the end of the year, at least 50 basis points, okay? Secondarily, we have a weakening US dollar. It's down at levels that we haven't seen since 2022, right? Then you have central bank buying, and central banks have been buying like 1,000 tons of gold every single year for like the past 10 years, right? And then we have our macro and our geopolitical risks, right? You've got wars and things happening everywhere. You've got, your government shutdowns, things of that sort, right? So some cautionary flags, okay? Gold and silver have had an absolutely parabolic run, and gold is actually inside of what I would call parabolic parallel, right? And I'll show it to you whenever we do the gold analysis here in just a little bit, but this could be overextended a little bit, okay? But I'm also going to give, and that's why a lot of people are wondering, like, is this the near-term top on gold? Is this the near-term top on silver, which we're going to talk about, right? There could be a possibility of a pullback if markets kind of stabilize, right? And risk policy kind of, gets a little bit better, right? So also, one thing that's noteworthy is we have short-term ETF flows. They are hitting record levels almost every single month. It's pretty wild. Then we've got obviously the US government shutdown. It's creating macro uncertainty and disrupting data flows. Okay. Then there is your environmental and your supply risk. We've got a lot of illegal mining that is happening right now, which is going to potentially bring a surge in of demand, right? Secondarily, there's mercury exposure issues that are persisting a lot in Peru, which could negatively affect the gold market because of environmental factors. People don't want to people don't want to support things that are bringing mercury poisoning to potential water supplies, potential ecosystems, or just people in general, right? And then we also have some mining producer news. We had strong gold output in this past quarter from some pretty big mines like Kaiser Reef's Henty mine. As gold prices are kind of amplifying that performance, you have to ensure that if gold is going to continue to go up, the demand has to outweigh the supply that's coming on the market. So let's get into what everybody came here for, which is called the Golden Nugget, because you come for the braids, but you stay for the trades. And I want to get into some technical analysis and tell you whether or not my opinion is if the top is in on gold and if the top is in on silver. And then I'm also going to give you all the information. I'm going to give you all the TA, but I'm also going to give you all the fundamental and, technical information that you need in order to make that decision for yourself as well. So this is something that we teach inside of the Golden Opportunity, okay? And I just want to zoom out a little bit, and we're going to go to the daily chart on this instead of the hourly chart, because a lot of our trades, like the trades that we took last week that we went 5 for 5 on, absolutely killed it. Right, we do that on usually the hourly chart. So I want to zoom out to the daily chart really quick, and I want to show you something. And I've taught this concept a couple of times, but I want to show you why I don't think the run is over on gold, okay? And I'm going to give you other reasoning and basis behind this, why I don't think the run is over, okay? So if you take what is called a Fibonacci retracement extension, right, which is right up here, you can come up here and you can do the trend-based Fibonacci extension tool, okay? You can draw it from the low back in 2021, 2022, bring it up to the high of, let's see, August. This was 2018. Sorry, I was talking about the, low over here. Then we've got 2020, the high right here. And then you draw it all the way over here, and your third touch point is the very low that came in after that all-time high came in. Bang. As you can see, that's right here in 2022. This gives you a fib extension level. And as you can see, it gives you all of your key levels in between there. And as you can see, the first time you got up here, you got to the 1.618. Well, first and foremost, we got up to the 1.0, we rejected. We got above it. We used it as support. We bounced above it. We got up to the 1.618, okay? This was around $3,100, okay? And the 1.0 was just over $2,500, which was a key psychological level for gold to get over. So we got over that. Then we got up to the 1.618. We rejected. Guess what? We pumped right through it, and then we used it as support yet again. Came back up, capitulated at the 2.236. Boom, blasted through all the way to the 2.618 that we are at right now, okay? So you may be wondering, okay, why is there no short-term or near-term top here? Well, the next, I guess what we would call, the next really key level is going to be $4,925. And you might not be able to see that, but it's all the way up here. And it is way, way, way far from here. But there are levels in between this. There's going to be your 3.0 level, your 2.786 level, your 3.236, your 3.382, and your 3.5 level before you get to the 3.618. So you can double click this tool and you can start putting in your levels if you would like to, right? So say I want to put in the 3.5 level, okay? And then bang, it shows me, okay, $4,800. Or I can just put in the 3.0 level, bang, it shows me $4,400. And this is how you can kind of find your new targets whenever you are in price discovery mode. But the one thing I want to show you as well is this parabolic, what I'm calling the parabolic parallel, okay? And this is gold's parallel. And as you can see, we had a parallel right before this. That was right here. And now this parallel is part of a larger parallel, okay? And this parallel, as you can see, the smaller one, we kind of came up, deviated outside of it, came back into it. It was very well respected. I mean, we've been trading this parallel for a year, right? And now we have, with this new high, set a new parabolic parallel. And as you can see, when you get above this parallel, you can use it as support and pump to the upside. But most of the time, you will break down from these parallels and then pump to the downside or dump to the downside, right? But here's our parabolic parallel. We are coming up to a very key and critical area at the 2.618 and at the top of this parabolic parallel that has 3 touch points. As you can see, 1 all the way back here to December of 2023, 2 right here in April 2024, and then 3 touch points right here. As you can see, 1 touch point here, 1 deviation outside of it, a 2nd touch point on the bottom, 3rd touch point on the bottom, 4th, 5th, and then boom, blast off, right? So there is a potential that you come back down here to, maybe the 2.236 level at 36.57 and potentially even up further if you get above this parallel. So that's just kind of a high level understanding of, I don't necessarily think that the run is over on gold, and I'm going to tell you exactly why in, the segments that are about to come up. So let's get into our 3rd segment, and this is called the Central Bank Watch. Wait until we get into the, gold TA here in just a second, where we talk about the 5-for-5 trades that we had last week. Absolutely killed it on. Anybody that took those trades, congratulations to you, and we've got new trades for you this week. Now, central banks, these guys are buying, okay? China added by itself, somebody that you may know, China, they added 400,000 ounces of gold in just September 2025 alone. Anybody know how much 400,000 ounces of this is worth? $1.6 billion is what their central banks came in and brought into the gold markets. Kind of wondering, how this thing just keeps kind of going up, right? So many central banks are also stepping up their gold purchases, not just China, as a de-dollarization and diversification play, especially in emerging markets like Asia, like, Europe and things of that sort, right? 95% of central banks, global central banks, all of them combined, they are reporting they will increase reserves over the next 12 months. And then 40% of them are reporting that they are going to continue increasing until the end of 2025, no matter what, right? This is crazy, crazy demand. So central banks in Asia, China, we've got central banks in Eastern Europe, which is Poland, and then Turkey have been among the top net buyers of gold, okay? And for the first time since 1996, and we have the statistics on this, foreign central banks holding of gold in terms of value have overtaken their holdings of U.S. treasuries, okay, as part of their foreign exchange reserve allocations. This isn't just like a symbolic shift, okay? It suggests a structural rebalancing, okay? And, of these reserve portfolios towards gold and away from dollar denominated debt, okay? So the other thing that I kind of wanted to talk about is that they have 27% of global reserves are in gold, and they are valued at $4.675 trillion, whereas the U.S. debt and treasuries that they hold is now only 23% of their portfolio, and it's only worth $3.5 billion or $3.5 trillion. Okay, so we're talking the difference in between 4.675 trillion and 3.5 trillion, right? That's a 30% uptick because gold continually appreciates and the dollar is continually going down right now, right? So let's get into our 4th segment, and then we will get into our TA. This is called market movers, okay? So what events or dynamics could actually prompt near-term swings, whether up or down in gold, okay? So for this week, we have FOMC meeting minutes, right? That is coming up at 2 p.m. Eastern Standard Time today. Markets are going to parse for hints to see what the Fed is going to do in the coming months, okay? Then we have the government shutdown. It is still shaking up markets. The latest on that, Trump has issued a controversial memo. This is very controversial, okay? He has asserted that furloughed federal workers are not automatically entitled to back pay, okay, under the ongoing shutdown. A sharp departure from, the previous practice and a move that's escalated tensions inside of Congress and just inside of the broader geopolitical, sphere, right? Meanwhile, the shutdown is beginning to ripple into financial oversight. key regulatory agencies like the SEC, the CFTC, they're starting to have to furlough workers, right? And it's just delaying market functions, man, and filings. Okay. So it's also delaying all of the reports that we are looking at every single week, jobs reports, things of that sort, right? So as it sits, bipartisan resolution, it's hit a standstill and there's, no end, like kind of quoted in sight. So the dollar is also on a steady decline and it is the lowest. It's at the levels that are as low as March 2022. That is why you're seeing gold go up. People don't want to be in the dollar right now. That's why you're seeing the S&P go up. That's why you're seeing crypto go up, right? There's a possibility of a correction here, given how far gold has run, and there's profit taking possible, but how much downside is plausible? Probably not that much. And the key data points to talk about is because the central banks have 36,344 tons of the gold, right? As reported by the World Gold Council. Okay. This is steady accumulation and buying. So this is helping kind of bolster a floor for the demand of gold and the price of gold. Okay. So now that we understand everything that's happening inside the market, let's get into the good stuff, right? The first thing we are going to do is the silver snapshot. So let's go ahead. Let's get into the charts. Bang, right? So let's talk about what went well last week because we absolutely killed it last week. We talked about this short right here. We talked about this short and we said, look, if we get an SFP at these highs, we're going to enter. We're going to ride it all the way back down here to the 1.786 fib. We're going to front run it. We're going to kill it. And we absolutely did. We got our SFP and our bear div, right? Because I give you the actual rules behind the trade. SFP, which is a swing failure pattern, and we got a bearish divergence at those 14-year highs, which got us our trade. It was absolutely wonderful. It was a beautiful trade. And, congratulations to anybody that took it, man. Like, seriously, you killed it. You absolutely killed it. Now, here, this trade actually, this trade is, I should not have this on here. I just gave you a spoiler. Sorry about that. Sorry, not sorry, right? So as soon as we closed this trade out right here, guess what we did? We entered long at the 1.786 fib, and it is at your take profit, $49. Absolutely killed it. I took profits a little early, I'm not gonna lie, but if you let this thing run all the way up here, I took my profits all the way down here, but if you let this thing run all the way up here, you hit your full take profit at the $49 level, and you're getting dangerously close to that 2.0 level, which is where we were talking about we might start thinking about taking some shorting opportunities or continuation on our longs. So let's talk about what's actually going to happen inside of the market. I'll give you the other trades that you could potentially take. Say we get down here to the 1.786 fib at about $45.82. You can take that trade. If you lose that, because you've lost the 200 moving average, you've lost the point of control at that point, which is the yellow line. So then secondarily, if you get all the way back down here to the 1.618, you have to long. You have to long on this, and you're bringing it right back up here to the consolidation zone. You're getting in at about $43, and you're bringing it all the way back up to about $45, right? Secondarily, we have this right here, okay? And these are getting, down into the weeds, but if you hit the 1.5 fib at 41.16, you're going to be riding this bad boy all the way back up to the 1.618 at about $43. And then you also have your long down here if you want a secondary entry, which is the point of control, which is just a little bit under that right here at about, I think it's $40.90. Okay, so if you get a bounce there, kind of know what's going on. Now, we also have, if you lose this 1.618 fib, bang, you're shorting, and you're probably bringing it down here to about the 1.5 fib. So you're shorting from about $43 to about $41 and, call it 25 cents or so. And then we have this short as well. Same thing. POC, if you lose the POC in the 1.5 fib, you're shorting this down because you're probably going to get right back inside of this parallel, okay? So you're going to be shorting here from about, about $40.86, $40.65, all the way down here to about $39, okay? So that's what I'm seeing. Other than that, here's the new trades, right? I just want to get you caught up on the old trades. You can long at this 200 moving average bounce. Say you lose the 50 and the 100. This is your last line of defense, the 200 moving average, especially If it lines up right here and you get a swing failure pattern at these lows, you're going to be longing, you're going to be bringing it right back up to $49. Your entry will probably be somewhere around $47.40. Just depends on where this 200 moving average is and how far you wick down if you do indeed get this SFP down here at these lows, right? Secondarily, if we get above this 2.0 Fibonacci, right, at $49.30, and we bullishly backtest it and we bounce, we're taking this bad boy all the way up to about $51 to $51.50, okay? So you're entering at about $49.30, taking it up to about $51.50, something like that, right? Then, these are the shorts, okay? Now, if you lose the 200 and you lose this point of control, you are shorting this bad boy right back down to the previous consolidation zone. So you would be taking it from about $46.90 entering short to write it down to about $44.95, or call it 45 bucks, right? Secondarily, if we do get, now that we've set these highs, okay, and I'm going to zoom in and show you what's going on with this. If we do get an SFP right here, swing failure pattern, you can start shorting at this value area high, which is just above $49. Your first level to watch for is the 50 moving average right here at about $48.40. Secondarily, you're going to be looking here at about $47 and call it 48 bucks at the 100 moving average. And your third and ultimate target is going to be right here at these lows at about $47.35. If you keep going from there, you just got to watch if you lose the 200, if you lose, this point of control at $46.87, you just keep on shorting, man. That's all it really comes down to. And then what we have here, if we get the rejection at the big dog, the big daddy right here, the 2.0 at $49.30, we are shorting this bad boy right back down to the consolidation zone, hopefully the bottom end of it, and the 50 moving average somewhere around $48.36. And we will just see what happens at that level, because again, if there's part of a larger correction here, we're just going to keep riding that bad boy to the downside. So now that you have all the levels and all the insights on silver, and you saw the trades that we went 2 for 2 on last week, let's go ahead and gauge gold. So we absolutely killed it on gold last week. We're going to get into the 1 hour chart. I know I did a little bit of TA earlier and kind of showed you what was going on inside of the markets, but for all intents and purposes, I want to show you what's going on now, right? So let's pull up our trades folder and let's show you what went well, right? Bang. Look at that 10-1 long of the parallel top. Where's that parallel at, Drew? Well, it is right there. Let's get this parabolic parallel out of here. Last week we said, look, we come back down to this parallel and this 100 moving average, we bounce. We are taking this bad boy up to $4,000 to the 2.618 Fibonacci, and that is exactly what we did. This was an 18x risk to reward trade. Every dollar that you risked, you made $18 on this trade if you took this. This was an absolutely insane trade, okay? Secondarily, right before that, guess what we did? We said, hey, if we get this SFP right here of these highs, we're going to short down to the parallel top, and then we're going to enter long. Bang, SFP, target acquired, target absolutely smashed. Then guess what you did? You just flipped long, and you absolutely killed it. Okay, secondarily, this short, it has not hit yet, but this is a short that you can start thinking about once we get up here. We did not get a rejection here at this. We just blasted through it. I mean, look at this candle. Blasted right through it, kept going, kept going, kept going. Just green candle after green candle. We never got our short on that. It is what it is. But what also did we get? Well, check it out. We got our long right here. There was no SFP here. We were talking about this swing high over here. We said, look, if we don't SFP this and we come back down to the 50 moving average, we can then bounce and then take it back up to the all-time highs. And that is exactly what we did. And then guess what? As soon as you got up there, bang, you entered the short. And then as soon as you got out of that short, bang, you entered the long. If you want to learn how to do this, get inside of the Golden Opportunity. I'll break it all down for you at your own pace, and you can go out here and extract some money from the markets and have a little bit of fun with it. So what can we do now? Well, obviously, we get under this 2.618 Fibonacci at about $4,007. We come down here, we reject, Bang, we bearishly backtest. We're bringing that bad boy down to at least the 200 moving average at about, as it sits right now, 38.78. If not, to the bottom end of the trend, or the top end of the trend channel at about 3,850 bucks. That is what we're seeing right now. Secondarily, if we get an SFP of these highs somewhere over here, guess what you can do? Short it down, see what happens at the 2.618, see what happens at the 50, and see if you can get it all the way down here to the bottom end of the parallel. And then again, you just take this trade all over again and you long that parallel top, baby. That's what we're talking about. That's exactly what we're trying to do. And secondarily, we have this right here. You long the 2.618. Sorry about that. I still have my drawing tool on. You long the 2.618 and the parabolic parallels top bounce. This is the parabolic parallel, if you remember from the TA that I was doing a little bit earlier, and it is coinciding with the 2.618. So if you do enter this short on this SFP, you have to watch what happens right here, especially if the 50 moving average intersects right here. This could be a key bounce point to take your long position at about $4,000 to $4,010 and ride it all the way up to about $4,200 for some massive, massive gains. All right, so 5 for 5 last week. Let's see what we can do this week. We've literally lost, this show has been going on for like, I don't know, what, 16 weeks or something? We've only lost one trade one time, and I think we're like 39 for 40 on the Golden Nugget. You can go and check it on the Verified Investing website and just look at my win rate or whatever, but you'll be able to see it. And let's talk about now the economic calendar. What's going to happen in between now and the next time that you see me next Wednesday, right? So obviously today we know that we have the FOMC meeting minutes, okay? This is key. Markets are going to kind of digest and try to understand what they're going to be doing. And again, this is at 2 p.m. Eastern time, okay? United States. The markets are going to be trying to decipher, okay, are we getting more interest rate cuts? And you'll see reactions in gold based upon that sentiment, right? Then tomorrow, we have wholesale inventories, okay? This is going to give us insight into supply chain and inflation pressures. And man, we're supposed to have some other reports. I'm not even going to talk about them because the government shutdown is kind of blocking these reports from coming out, okay? Then on Friday, we have the University of Michigan's consumer sentiment, okay? That's going to gauge and this is just a preliminary report, okay? But this is going to gauge consumers' mood and see, like, is the economy still doing well, okay? Then on October 15th, which is next Wednesday, we have CPI and real earnings. This is incredibly important, okay? And this happens at 8:30 in the morning. And then we have on the same day at, I believe, 2 p.m. Eastern time, we have the Federal Reserve's beige book, okay? So these are the things that I'm seeing. Then obviously next week we have, retail sales, housing, starts, and, the next FOMC meeting is a couple of weeks from now. But yeah, we really need to see what's going to happen with all of these kind of reports. You've got your employment situation, your non-farm payrolls release, but they're likely all going to be delayed until this government shutdown is over. It kind of sucks, right? You've got your PPI, your import-export, price indexes. They're scheduled for mid-October, which is next week, but, are they going to come out, right? Are they going to come out? Trade balance, durable goods, factory orders. These were actually earlier and in October, and some of them were reported and then some of them weren't. So it's kind of like up in the air as to what's actually going to get reported and what's actually going to get delayed. So just take that into account, because when the government opens back up, there might be a flood of these reports and you're going to have to decipher all of them, a bunch of them all at the same time. And there could be some serious volatility inside of the markets due to that. So with that being said, thank you seriously from the bottom of my heart so much for showing up to the Golden Nugget every single week. We absolutely killed it on our trades this week. We're going to keep trying to kill it every single week for you. I appreciate you so much. I know Verified Investing appreciates you a lot as well. Anybody that's watching on the Verified Investing YouTube channel, their Twitter, my channel, my Drew Wolfer YouTube channel, my Twitter, wherever it is that you're watching for, we appreciate you, and we will see you all soon. Everybody have a wonderful day.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.